Okay, we are live. This is Matt Durbin here with eXp Realty, and I've got Kevin O from the Movement Mortgage team. And today we wanted to talk a little bit about the coronavirus. Obviously, we've seen all that on the news. We've seen what it's doing to the stock market right now, and we're kind of looking at what's that going to do to interest rates. A lot of predictions are they're going to hit historic lows once again. So obviously, if you're a buyer in today's market, interest rates are going to be at all-time lows again. If you're looking to refinance, now is the time. Potentially even look at a 15-year mortgage. Maybe cut your overall mortgage in half. But I brought in the expert here. I brought in our mortgage guy Kevin to kind of talk about rates, what's going on with interest rates, what's going on with the stock market, and what's going on with the 10-year Treasury. So, Kevin, what are you seeing out there?
My man Derbs, appreciate it. Happy Friday, everyone. It is freezing here in the Berg, but we just want to share a little bit what's going on, obviously. So kind of what's happening in the financial markets right now is the coronavirus has basically created uncertainty with investors. So investors are basically selling off equities, and they're really shifting and diving towards a safer investment, known as the bond market. So with that inverse relationship that's going on with the stock market and mortgage interest rates, as the stock market does well and goes up, typically mortgage rates go up as well. But as the stock market goes down, mortgage rates go down. And one of the best instruments to follow on what mortgage rates follow most closely with is the 10-year Treasury, which, Derbs, why don't you pull that up for us just so we can take a look. So, guys, this is a look at the all-time stats on the 10-year Treasury. So as we take a look at this morning, the 10-year Treasury hit an all-time low at 1.21%. So this is hot off the press this morning. That's going to be making headlines across America today, 1.21%. So this graph that we have up is dating back to 1962. So we're seeing some of the lowest mortgage rates we've ever seen. So like Matt said, if you're a buyer, this creates a lot of opportunity for a potential buy-up. If you're looking to upsize, now is the time, just because the higher that rate is, the less you can afford, because the higher your monthly payment is. And obviously, the lower the rate is, the more you can afford and the more it makes long-term financial sense. So just to give everyone kind of a benchmark, right now, I recorded a video yesterday, and there's this national mortgage news that collects data and surveys from lenders across the country, and the average 30-year mortgage rate right now is around like 3.3-ish%. We expect that to continue to fall. So just think about that for a second. Like, let's unpack that. 3.3% on a 30-year mortgage. A lot of people are paying more than that on an auto loan. These banks aren't making much money with that kind of interest charge. So whether you're in the market to purchase, now is an excellent time. And also, obviously, refinancing. I mean, we are buried in refinance applications right now. Whether you're looking to go to a 15-year, just do a simple rate refi, where you can do a rate and term and just lower your payment. It's an incredible time, Matt, right now.
Hey, Kevin. So if let's say you're somebody, you're a homeowner right now that you purchased, let's call it 5 years ago, 7 years ago, 10 years ago. Obviously, the rate that you paid, or the rate that you're paying on your home right now is, it could be in the fours. It could even be in the fives, depending on when you purchased your home. If you didn't take advantage of that refinance time frame, we've had obviously a couple of different time periods where we've hit really low rates. If you haven't taken advantage of that, it's obviously a time to look at that right now. And I say that 15-year look. I mean, 15-year rates, I mean, they're lower than that even, right? So like, if you're somebody who's been paying on your mortgage for 7 years, you're paying in the fours on a 30-year mortgage. Now you look at a 15-year mortgage, you might have the same payment and just cut 8 years off of the total mortgage, right?
We just had a client yesterday that I think 2 years ago was locked in at a 15-year refi around 4%. And we're quoting that out somewhere in the high twos as of today. So I mean, as a $300,000 mortgage, that's like a think it was a $200 savings per month, and over 10 years, a $30,000 finance charge savings. So I have the graph pulled up, and in September of 2018, so the latter part of 2018, excuse me, the 10-year treasury was at 3%. So as of today, it's 1.21. So if you kind of bought anywhere from the beginning of 2017 to even the beginning part of 2019, the mid part of 2019, you're probably paying over 4% on a 30-year mortgage. So if you bought during that time period, it's an excellent time to look at the refinance opportunity. And when someone's assessing and considering a refinance, there is truly nothing to sell. It's simply cost and break even. So to refinance, it's obviously not free. There are costs associated, but it's a cost benefit analysis that we'll run for the client to say, hey, we're going to be extremely transparent about this. Here's your cost to refinance. And here's the time. This is your break-even point. So if you're going to be here past the break-even point, we recommend moving forward. If you're not, we're stopping right here. Even if you want to move forward, I'm not doing your mortgage because it doesn't make sense on the financial structure. So that's how you have to look at the refi opportunity based on a cost versus benefit analysis.
Exactly. You want to look at how long do you plan to stay in the home?
Right.
Right. Exactly. If it's 2 years, then this probably isn't for you. But if it's 2 years, now you might be looking at, well, do I make that move up purchase this year as opposed to waiting 2 years? Because the cost savings, just in terms of what your mortgage is and affordability, is dramatic when interest rates get down into the low threes. It's almost free money at that point in time. So that $300,000 mortgage with a 1% decrease in an interest rate, you might be able to afford 330 now, 340, 350. You just put yourself into another tax bracket just by a 1% decrease in interest rate. Kind of depending on, all other factors included, obviously taxes, insurance, stuff like that.
Right. And some other kind of reasons you would want to consider refinancing right now is remove mortgage insurance, switching from an FHA loan to a conventional loan if you have enough equity. There's a couple really cool programs. If you are in an FHA loan or a VA loan and you cannot switch to conventional to remove that mortgage insurance, obviously with VA there isn't mortgage insurance, but FHA and VA have special programs with extremely limited costs where you can do it's called an interest rate reduction, and they won't check your income. They won't check a lot of things, and it's such a streamlined process that we can really close these up in about 10 days with limited documentation. It's called an FHA streamline refinance. We do have to pull an updated credit report to confirm the borrower's credit has stayed in the same spot, but we're not rechecking their income. We're basically, the FHA and VA are saying, okay, you already have this mortgage. Maybe we can do you a favor and get your payment lower. So you're already in this mortgage, regardless of what has happened with your job or employment. Maybe we can put you in a better position so your chances of repayment continue to stay good. So those are other options out there if you can't go into a conventional loan program.
That's a good point. Okay. Kevin, anything else before we kind of wrap up? Obviously, we know what is set to come. We know what's set to hit. Obviously, we're going to continue to watch the market.'re going to watch the stock market. We're going to watch the bond market. We're going to kind of see where things are going. Obviously, you're never going to time it perfectly, but if you're thinking about refi purchase, can't be a better time for you right now with how cheap money is.
Yeah, and I think the last thing I'll leave everyone with is this is kind of a market where you roll the dice a little bit. I have a client right now that went under contract, so they have the ability to lock in a rate. And my advice has kind of been to, let's hold off for a couple of days and see what happens. And, luckily my advice has been correct so far, but it's one of those things you never know what the market's going to do with this much volatility. Now that it's hit an all-time low at 1.21 this morning, I probably recommend going ahead and locking, even though there are good chances it could fall lower. Take advantage of an all-time low, just lock in at an extremely low rate and move forward with your purchase or refinance.
Sounds good, man. So I appreciate you jumping on here and talking through things. Obviously, if you have any questions, you want to look into anything like that, obviously reach out to me, reach out to Kevin. We'll put the contact information in the link below the video, whether you saw this on Facebook or YouTube or wherever you saw that. And obviously reach out to us if there's anything that we can do.
Awesome, guys. We'll see you.
Okay. Thanks, guys.